about 20 points higher, moving around a little bit there. The Nasdaq up about 53 points higher. The S&P 500 up about 5.5 points higher. We'll also take a quick look at the 10-year. And then I want to get over to Steve Leisman. Right now, the 10-year note standing at 1.570. And Mr. Leisman's got CPI numbers. Mr. Leisman.
Thank you, Andrew. Yeah, 0.4 on the headline, 0.2 ex food and energy. A little hotter on the headline, a little softer on or cooler on the ex food and energy. Year over year, 5.4. We were looking for 5.3. Ex food and energy, though, spot on 4% year over year. Energy up 1.3. That was strong. Real earnings of private workers 0.8. So that's good. They're keeping pace with inflation plus a little bit. And then I'm going to turn to the table here to see if I can get the actual individual areas here. Give me 1 second, Andrew, and I'll call it up. There it is. Okay, going down. Let's look at the month-over-month change. Food up a strong 0.9%, led by food at home 1.2%, food away from home 0.5%. Let me look at that used car area there. That's still negative, minus 0.7%. I think that's going to change a little bit. And airfares was another area that gave some relief in the prior month, and I don't see it right there, but let's look at some other areas. Fuel oil, 3.9%, utilities up 2.7%, all of this energy related, getting away from the energy areas. Commodities, a little relief in there, 0.2%, new vehicles.
All right, let's take a look at ourselves, and we'll just quickly go over that. So let me know now if you guys can hear me, if you guys can see me, and everything is working without any issues. But there we go. We saw the CPI increase 40 basis points in September, and rising 5.4% over the last 12 months. So we saw a little bit of an increase now, and the core CPI up 4% year over year, increasing 20 basis points. Let's just quickly go over to our PDF. And we'll talk about it. So this right here, 40 basis points, a little bit higher on the month here, coming back up from 30 basis points, so a little bit of a tick higher on that CPI number. And this right here, once again, we were starting to plateau, core sitting just at 4%, then we got total CPI ticking up 10 basis points from 5.3 to 5.4%, so definitely a little bit on the higher end here for the total CPI. I'm really not sure why my audio is just so low today. Is it really low? Maybe because I'm not using the actual microphone. I just switched up my connection today, so I think that's a little bit wonky, but I might have to just scream, you guys. I do apologize for this, but I might have to just scream on the screen. Apparently I'm not even connected to the microphone. I think that's what's happening, but I really don't want to screw up with any connections. But then we got the screen to froze, so I really don't want to mess it up right now. I'm just gonna have to start screaming. But let's just take a quick look on individual line items. So this right here, what we're really looking forward to is everything on the right. So all right, let's just quickly go up a little bit right here. So what we're really looking forward to is everything on the right. So everything that you see that's gone up or down substantially on the right, that's going to be August to September inflation right here. That's what we're really looking forward to, right? So all items, it's going to be up over 40 basis points. That's the overall number, going to 5.4% year over year. And then you'll notice that if you come down here to core CPI, when you exclude food and energy, that's going to be up 20 basis points to 4.4%. So just about 4% here, so 4.0%. But let's take a look. So we got right here 3.7% increase in fresh biscuits, rolls, and muffins. So that was a little bit higher coming in from September till August. 4.8% was beef and veal. Meats going up a little bit over 3.3% month over month. Then coming down 3.8% here, that's also Frankfurters. Frankfurters have been going up 2.6%, 4.8%, then saw a significant drop last month. Is my screen frozen again? Oh my god. Is it? Alright, is it not? I just wanna make sure that it's not. I really don't know what's going on today. But alright, let's take a look at here. 3.8% also for apples. Let's just quickly search energy here. So energy index also rose 1.3%, so that's what really what we were concerned about. We saw a little bit of an increase in fuel oil, 3.9% here, 3.89% in fuel oil, energy 1.3%, and then we got energy commodities 1.3%, and then utility pipe gas service 2.7%. So not a huge increase. Definitely for fuel oil, jumping up 3.9%. That's also what Delta Airlines mentioned in their earnings, that they do expect cost going up as a result of oil prices going up as well for them and for the earnings. But overall, I would say that this was kind of like a decent inflation's reading. Was not a huge increase, but definitely ticking back higher. The upside, as we do see a little bit of pressure on the CPI, on pricing in general, and of course, energy has had a huge role on that. So total CPI jumping up 10 basis points, and core just pretty much flat year over year, and the market's pulling back a little bit. S&P is now pretty much flat here, and the Nasdaq still up over 24 basis points, and the Dow Jones is also flat so far on the day. So just over 5 basis points in the green, and SPY also up over 9 basis points. We got the Nasdaq ETF just up over 27 basis points as well. So that's that. Now we're gonna continue with our so whatever our earnings were. So Delta Airlines, like I said, was beating estimates for both the earnings and the revenue, but they do forecast a modest current quarter loss due to higher fuel cost. Both JP Morgan, BlackRock definitely came in much higher than expected earnings, and ended up beating estimates as well. So Plug Power, the hydrogen fuel cell maker, jumped 7.1% in the pre-market after announcing a partnership with Airbus to decarbonize air travel and airport operations, with plans to select a U.S. airport as the first hydrogen hub pilot airport. So definitely jumping up over 7% here on the day, breaking out over some of that resistance levels that we talked about. So breaking out to over $31.81. So this right here was that resistance that we were talking about. We definitely got a nice breakout yesterday. It was up over 7.7%, and today certainly breaking out even further to over $30 a share. So this right here is going to be that new support level to watch for Plug Power, and the next target and resistance for Plug Power is going to be sitting roughly at $35 a share. So Louis, has monthly inflation been released yet? Yes. So inflation report was out. This is perhaps my poorest coverage because of all the technical difficulties we had. But yes, inflation was out. We are sitting at 5.4%. We saw a 10 basis point increase month over month, and of course we're seeing a little bit of an increase from the year over year as well. And core CPI staying flat at 4%, saw a 20 basis point increase month over month as well. Energy prices did contribute a little bit to that higher inflation for the total CPI, which includes energy. Fuel oil was up over 3.9%, but I will have to do a updated analysis, like a summary video after this live stream, to go over exactly which specific things were higher or lower. But overall, kind of like a decent read. And again, inflation, just total CPI jumping up a little bit, and core staying flat. Energy prices slightly ticking higher, specifically for fuel oil. And as a result, the markets, especially the S&P 500, coming down here, and the Nasdaq also starting to pull back. Jeffrey, I'm literally screaming right now. You may not realize it, but I'm speaking about as loud as I can go. So we got the Nasdaq ETF up over 22 basis points, and still pulling back here a little bit, so coming back down. And we got the Dow Jones also flat. I was actually listening in on CNBC this morning, and I was listening in on one of the analysts that actually put a lot of things in great perspective, and he basically said that there are two different types of markets right now. The one of them is actually kind of like, going to business school, learning discounted cash flow, learning about companies that are growing their dividends, growing their cash flow, so on and so forth. So it's kind of like very old school market that is still looking for companies that are undervalued. But then there's a whole different type of market which is more speculative in nature, that includes a lot of bubbles for companies that are not yet profitable but still trading at very, very high market caps. And that's as a result of the $3 trillion in savings that Americans are sitting on right now, which really is keeping this market at an elevated price. And pretty much every dip that we see gets bought up very, very quickly. And of course, the services, the debt is being serviced at a very lower price as well, because of the cost of borrowing, with the interest rates being so low at the moment. So all in all, that's really the two different types of market that he sees right now. And he also mentioned that the employment numbers, the jobs numbers, are going to be very, very tough moving forward because of how much job openings we have, over 11 million, but we still have over 6 million people right now unemployed. So definitely not being able to find jobs for the actual industries or sectors that they're looking for. So Qualcomm, we already covered, announced a $10 billion share buyback program. The chipmaker's newly announced buyback is in addition to the $900 million still remaining from a buyback program instituted in July 2018. So they didn't actually mention a timeline as to when they're going to start buying back, or when they're looking to end this share buyback program by, like when that 10 billion is going to be fully utilized to buy back its own shares. But I'm expecting this to be at least like for the next 2 to 3 years, and for them to use this out of their cash resources, which I believe they're sitting at well over 12-14 billion dollars in cash on the balance sheet. So this acted as a positive catalyst, and this should act as a positive catalyst. Qualcomm is up a little bit over 1.4%. So Kinari, love your videos. For your information, your volume is typically much lower than other YouTube videos. So yeah, I really don't know what's going on today. I'm trying my best because apparently this microphone is not on, but I'll definitely make sure to kind of fix this. I've been having these issues since yesterday. If you guys hadn't noticed, I put out videos on both Tesla, Palantir, Neo, and of course the market update much later than usual because of all technical difficulties. Because my computer is like in the final stages now. Like the computer that I'm using now is just screaming to just let me go, because I recently purchased a new computer and I haven't really broken into it yet. Like I'm gonna start using my MacBook very soon, but the computer that I've been using for the last 3 to 4 years is just now, just in its last stages, and I'm just like so comfortable. I've been using it for so long. It's kind of like my only computer, so I just don't want to let go of this right now. But it's definitely it's coming to an end. It's a Razer, and I've used it for a long time, but definitely would need to switch over to the Mac very, very soon. So all right, that's that. The inflation, is that data good or bad for the markets? That's a great question, Jeffrey. In my opinion, that's kind of somewhat a little bit to the worst side, only because inflation is elevated. It's still high, right? It would have been a lot better if inflation ticked lower. Like I said, total CPI, my expectation was 5.3% or higher. You guys can go back to our Discord and you can read what my personal expectation was from the inflation numbers, right? So let me actually pull that up very quickly. So I posted this market update over at our Discord yesterday, which I don't have right now, but let me see if I can pull that up as a screenshot. So just give me 1 second and I'll pull that up on the market updates channel. And this is something that we talked about yesterday. So all right, let's see. So this right here was the analysis on this entire thing. All right, so this right here is what we talked about, and for inflation, I basically mentioned that my expectation is going to be 5.3% or higher for the total CPI, and the core CPI at 4% or higher. And I would be pleasantly surprised if total and core dropped below 5 and 4% respectively, right? So if we dropped below those levels, then yes, it would have been great for the markets. But right now, just like I said, inflation is still pretty elevated, right? We're still high just from those historical metrics. And of course, for the Fed, the goal is to get that inflation number down to 2%. But of course, that is a long ways away, because right now we're still seeing a lot of price pressures because of the supply chain issues, because of energy prices moving higher, and how much buying power, spending power the consumers have, and it's obviously putting a lot of pressure on prices overall. So this is not the best for the markets, but this is also not like a huge increase month over month or year over year, right? So definitely pretty much of an elevated number for inflation, and we're seeing that being translated into the markets. The Nasdaq is now pretty much flat on the day, with the SPY coming down red, down about 10-11 basis points, and we got the Dow Jones also down about 10 basis points as well. So certainly not the great report that we were looking for, but this is also expected because of how much energy prices have continued to rally a little bit more. So Apple is likely to cut iPhone 13 production by as many as 10 million units due to global chip shortages, and that's exactly what we're talking about. So as the supply puts a lot of pressure on Apple as well. So this is again very very simple demand and supply metrics. As there's less iPhones, just an example right now is there's less iPhones because of the supply chain issues, and there's more demand, prices eventually go up, and that's happening across the board for a lot of different industries and sectors. And that would represent a cut of about 11% from current plans. Apple usually does anywhere between 200 and 250 million units per year, so averaging about 220 million units. So when you compare that 10 million unit cut to 220 million, that's less than 6 to 5% of their total output that they produce, total sales, which is still a substantial number. That's still going to be roughly translating down to like $2 to $3 billion in revenue for the company. But that is not like a huge catalyst to bring Apple down. But 135 is the level that I'm watching for the company. So this right here, Apple 135, kind of aligned with that 200 simple moving average, is the level that we're watching very closely. I do expect Apple to kind of retrace down to that level. But as I said, 10 million units is going to be roughly 5 to 6% of their total output. That's going to translate to roughly $2 to $3 billion, which is not a big deal, but certainly a decent enough catalyst to potentially bring Apple down to that 135 range. So Vimeo, this is also a company that we've been watching very, very closely. Total revenue in September jumped by 33% year over year, with the video software company subscriber numbers up 14% and average revenue per user, so ARPUs, up over 16% and gained over 3.6% here pre-market. This stock has actually been selling off quite a bit, but definitely we're seeing a little bit of a pushback higher here, up over 11% right now. Wow, so 11% for this stock at the moment. All right, so volume. All right, I'm just gonna pin this comment. Volume is low because of microphone issues. So I will fix that later. I'm just gonna pin this so that everybody joining in now doesn't have the same issues. You guys can read that at the top. So all right, that's that. But Vimeo up over 11% here, definitely pushing higher, and nice gain and a nice revenue jump and average revenue per user jump as well for the company. The real question really is, how much application does Vimeo have against YouTube and a lot of other video platforms? In my opinion, Vimeo is a little bit different. I use it to post a lot of my private Patreon videos, so a lot of our analysis, a lot of our research, all the private videos, tutorials I post on Vimeo that are very well integrated with Patreon, but that has a little bit of a different use case, right? It's not like YouTube, but Vimeo, like I said, is a little bit different and not comparable exactly with YouTube. That's why I'm watching this company very, very closely. So supply chain woes, rising costs may make for a rocky earnings. So supply chain issues, labor shortages, and higher energy prices are making this a very difficult quarter to model. And as of Tuesday, 22 companies that are early reporters beat estimates by 11%. And while this is above the traditional beat of 3 to 5%, it's far below the average of prior quarters this year, including the roughly 18% beat for the second quarter. And third quarter estimates, which had been rising steadily for months, have stopped in the last few weeks. All right, so before we even get further into the live stream, let me just fix the audio issue, right? We still have about almost 45 minutes till market open. I'm probably gonna end this live stream and I'll fix the issue and then I'll get back on. So if that works with all of you guys, I will do that, and I will see you in about 10-15 minutes at around 9 a.m. Eastern. Hopefully we can get that fixed, and I will restart the live stream. I will send out the link to our Discord members so everybody can hop on again, and hopefully we can get that audio issue fixed, because I see a lot of people commenting that they can't hear me, and there's no point me going over a lot of different stocks if people can't hear me. So I will be back 10-15 minutes. I will try to fix this, and I will send out the link in our Discord. So I will be shortly back. Thank you so much for joining in, and I will see you guys shortly.